Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, daily quick stock market analysis show where we look at the technical charts and try to understand what happened in the market during the day and then plan for a better trade for the upcoming day that's starting from December 21st, Thursday, 2023. Tomorrow we have a Nifty weekly expiry as well. So what kind of day we had? And finally the correction will come. That's what happened today. Bulls got trapped. Bulls trapped with a bearish engulfing, wide range bearish. Big 300 points for Nifty. Let's look at the charts. This is a wrap up. We'll come back here. Let's go to the charts to begin with, and we have a Nifty candles that we'll look at first. We'll have the plain charts. Look at this. Look at this. We had been talking about a consolidation. It did another breakout when the Fed interest rate turned dovish, but this time consolidation ended up with a breakdown instead of a breakout. We have been talking about that. We're talking about that it's Fibonacci extension, 78, the top, very top, and the trendline channel top, right? And it was consolidating, and it even trapped in the way that today new all-time high was made by with very close to 21,600. So after that it trapped the bulls and then went bearish. That's a big trap that happened on Nifty. So that's a candle. We have a wide range engulfing bearish candle that's also a bull trap. It engulfed how many days? 3 full days and more. Almost engulfed the 4th day as well in the Nifty. Now look at the candle of the Banknifty. It's also a wide range bearish engulfing, right? 4 days engulfed in one shot. That was also at the top, very top of a trendline channel, and also broken out of Fibonacci extension 78 as well. And today it didn't make a new all-time high, but it trapped the bulls by moving above the previous candle's high, and then people thought it may be consolidating, it breaking a support, or it may be breaking out, either of that, but never thought that this would be such gigantic moves at up to 3 p.m. especially. So big moves. That's what happened today. Bollinger Bands have slightly turned into contraction mode. It's not confirmed that it's still expanding, but there is a small contraction that can be seen on the Banknifty and the Nifty as well. Right? So the expansion is slightly turning into, so that indicates there may be some sideways action that can be expected, confirmed by the Bollinger Bands. Till yesterday it was not confirmed. It's only the price action that is confirmed, not the bands. So right, so this correct question now is, will this correction extend further down towards at least the 20 exponential moving average? Is it 2700, or would it take this as a support, which was earlier a resistance from where it broke out, and then do a change in priority, bounce up slowly, or one shot? Same. Would this consolidate and make more corrections towards the gap and 20 exponential moving average at 46,500, or would it consolidate? Or would it bounce up from the support or nearby support down, and from where the previous breakout happened? It is close exactly where the previous breakout happened. So would it take this as support and consolidate here and slowly move up, change in priority bounce, or would it break down towards the gap where a more meaningful correction can happen? So see, this is not a big correction, sorry, 1.5% correction, but imagine the kind of moves that has happened. We are talking about 13% move from the previous swing and total 25-26% of move. So this correction is not enough ideally. So let us check. Right. So that up move is paused. Now the Fyers are back on holidays, and market struggle to move up. Right. So maybe consolidation, or even there could be profit booking that can come in. Right, more corrections is what is likely, but changing priority bounce up from the support zone also cannot be ruled out. So that's where the markets are. So the levels, resistance to upside will be all-time high at 21,600 nearby zones, and after that 21,700, and then likewise rounding numbers. It's not uncharted territory where the Fibonacci extension also is at the, is also hit. So there's no way to predict on the upside, but yeah. If it breaks out, the rounding number is what we have a resistance. Downside, your those major support comes at 21k, right? 21k and 2950. That's a 23.6 Fibonacci retracement as well as 61.8 Fibonacci extension zone, And if that is breached, then you can go to straight to the gap at 2700 club. So that's where the major support could come in. That's because it's a confluent zone where 20 exponential moving average is also coming. It's 2750. Exponential moving average and gap. So that would be a good zone of support. That's another 400 points from here. So that's a possibility. So that's a resistance supports on the Nifty, Banknifty. Resistance upside is all-time high, 4220 zone, and after that 48,500 and 49k. Resistance and downside supports could come in at 23.6 Fibonacci retracement as well as 61 Fibonacci extension zone that's coming at 46,800 850. That zone. That's pretty then can take support at 46,500. That's a confluence of 20 exponential moving average also. So 46,500 is major support. That is breached, it goes to the 45,946 rounding number, that zone. So that's resistance in the Bank Nifty. Let's just quickly wrap up. So what happened today was big Nifty close, trapping the bulls and bearish engulfing the all the previous 3-4 days candles and managing to close above the 21,150 zone. It's 303 point loss on Nifty and it's 426 points. It's 0.89 less than 1%. So Nifty got the hit more big. Right, so it's a big, very big downfall that happened today. That too after trapping. Right? That's the beauty of it. Right. Anyway, managed to close about the 47,400. So remember, we are still in a rally of 25%, 30% from previous level, right? So it's not a small correction. There is a more could come in, given that the FI is going on holiday with his own for the Christmas and New Year and all that. So intraday the price action was somewhat steady, bearish, but somewhat it gapped up actually. Gapped up, giving the making all-time high in the Nifty and the Bank also moved up, and then it trapped the bulls. Multiple V-shapes did not happen. There was yesterday's. So basically today was a trap, a clear trap, and then it trended down. In the afternoon, the trend became severe, and after 3 p.m. it was intense fall. That's the kind of fall that happened. So if I'm selling today, that's 1,300 crores of selling that happened. So that's 3 days of continuous selling, smaller selling the previous days. Half of this is been less than 100 crores there firstly. So since 4 weeks, FS has been buying net to net on week-to-week basis. That was positive. Now that they're going on vacation, probably the selling is happening, or rather, no buying is coming. So that's what happened today. So it's a very that's adds to what happened in the market today. Resistance support levels we already talked about. So momentum is actually still maintaining bullishness, and the trend indicator also maintaining bullishness on the short term. Daily charts, they're still bullish. So from tomorrow you'll know whether that bullishness or momentum and the trend will be retained or not. Interestingly, India VIX has spiked further so after a long time it is going to hit the 1540.45, but it's still low regime considering that 20 above maybe where we need to be extremely cautious. But the VIX is spiking up in the market, still in the top, gives a feel that the fear factors come in more now. No? So band has started contracting, as I said, but not completely confirmed. Just began the contraction. You can see, so indicates probably there is a sideways contraction unless the band is straightened out in the next coming days. As of now, beginning of the band indicates that probably there may be sideways indication. So technically charts are bullish, but correction has finally come in after a long time. It has vertical move to the all-time highs that was happening without any break. Now a break or a pause has come in, and a correction also has come in with 1.5% or something. Not quite enough for a vertical move, but more could come in, so we have to be cautious about that. Alternately, this area could be a change in priority bounds area as well. You never know what happens, we have to be cautious on both ways. But downside is where the probability is more, since the correction has already began, sell-offs already began. Sectors, all sectors are red, right? IT and FMG sectors maintain bullishness, otherwise all other sectors, major 6 or 7 sectors, if you see, they are all fallen into, slipped into sideways with a big intense fall. Metal and the auto reality, all these sectors fall greater than 2%, more than 3%, 3.5% kind of fall. So others are fallen less than 1% or less than 2%. It's Heavyweight stocks, STP is the only one that has green, has a lot more negative, but momentum is maintained in the short term, except for the Kodak back and the ATC. That's around maintaining the daily momentum. And still in the bullish zone. So today's fall has got hit on the heavyweights because that is why the Fyers is selling. And also sector leadership in the bull run has paused and slightly slipped. Now to see the next days whether that slip is going to extend further or not. Anyway, overall the indice momentum and trend is intact in the bull zones. See, the market is still the top, showing green and heading to all-time highs and all that after the Fed positive news or dovish news came in last week. So that is maintained still. All the S&P 500, Nasdaq, and Dow Jones are all very close to all-time highs and all green since several weeks now, probably 5-6 weeks. Crude also spiking up after hit, going as low as less than 70. Alright, gold is also consolidating after hitting the all-time high, still in the top. Right. So this will be type if we get an opportunity of good correction of 3 to 5% comes in, maybe opportunity to buy good quality stocks as an investor. Momentum trading also may be possible. Momentum investing also may be possible if a breakout happens from here as a pullback and bounce up. So gotta be cautious. Profit booking could come in. Fear is there. DFX is showing that patterns are bearish, negative. So more falls could come in, sell-offs come in. It's already time. If it's not present to support market, so be cautious. Tomorrow we have an expiry that's there, and the level set is shown by the graphs and charts of 21,000 and 21,500, where the highest put writing and call writing is seen at these two areas. Put call ratio is bearish 0.48. Short build up in the futures OI is what you see. So that's a wrap up. Right? The correction may have begun. Decent correction has come in. Be cautious. For an investor, probably time to pull out some profit if you have made reasonable profit. And traders, you have to be cautious. Hedge your positions, and then if VIX is spiking up to above 20, be careful. Cut short your position size immediately. Manage risks, have hedge positions, no overhead risk, please. Yeah, that's what I have. Thanks for watching. Happy trading, happy learning. And if you're not subscribed, please subscribe and share to friends and colleagues. It helps reach out to max people. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.